Some good news in the world of rates. Finally, we saw some cracks in the markets, and the Feds have been trying to break the economy for a little while by raising the rates. And finally, we saw some evidence, and then we had some good speech from, or some good talk, some good words from Mr. Powell in his meeting last week. So let's kind of see what happened. I'm going to go ahead and start sharing my screen here, and bear with me one moment and pull this over to show you guys exactly what we have going on so far for last week. So it was a good week. So if you look at the overall, like on a 1 month basis, we had a nice little run up. Let's kind of show you what it looks like on more of a macular scale. Oh, that's too much. Let's go back to 6 months. So we saw a big run up in the bond market. Let's go back to 3 months. This is a little bit better one. A big run up last week. So we were bouncing around in here, not very good. We lost a lot over the last 6 weeks, since early April, actually 4 weeks. We finally saw a little bit of a rebound last week, when the Feds finally came out and said one of the most important things we've heard in a while, and they are going to be slowing down the sell-off of their mortgage-backed securities and their balance sheet. So what does that mean? Basically, over the last several months, a little over a year, the Federal Reserve has been selling off all of the bonds that they've been buying or that they were buying during COVID. So one of the biggest reasons why rates were so low during COVID is the Federal Reserve was buying mortgage-backed securities and treasuries at the tune of $80 to $90 billion at a time. So massive purchaser of them. That drove rates really low to the fact that, point where we've never seen. And it was phenomenal. It was great, but it was not real. So what they then started to do is they started to sell off those. So if buying them brings rates down, what do you think selling off of those does? It makes rates rise. So instead of artificially keeping them down, they started selling those off. Rates started rising. Then we had inflation problems. And now the Feds finally realized, wow, we need to slow the roll on selling off our balance sheet. And this last week is when they finally announced, we are going to do that. We are going to slow our roll. We are going to move back from selling these massive amounts of treasuries and mortgage-backed securities. We're going to slow that down to about 2/3 of what we were doing. And the bond markets really, really liked that. They also really, really liked the fact that that the Feds held rates where they were at. Obviously, there were some rumors that said that they were potentially going to hike rates, so they squashed that. They basically said there's no reason for us to raise rates any further. So the reason they were going to raise rates is because we saw hotter than expected inflation over the last couple of months. So they are afraid of what happened in the 70s and 80s, where they raised rates and then they cut them too fast. And then hyperinflation happened again because we stimulated the economy by lowering the rates, and inflation went kind of crazy. So they're afraid of that. They're not going to let that happen this time. Fingers crossed. So that was good news. So we had slowing down of the sell-off of the balance sheet. We had Powell saying they're working on raise rates and we're going to keep them steady as is. And then we saw some other unique pieces of the puzzle, which I've been really telling you to focus on, and that's the employment numbers. So the BLS jobs report came out last week, and they were expecting 246,000 or something close to that new jobs to being added to the workplace. Well, they only had 170,000, which that number actually is exaggerated. They use the birth-death model, which is very confusing, but it's not very accurate. They use that to bump up the number of jobs that were actually created. So in reality, it was a lot less than that. So that was very, very good news for the bond market. So we rallied, and as you can see, we had 3 very, very good days. Today's flat. We're kind of in between these two levels. So we've got the 50-day moving average and the 25-day moving average that the 200-day moving average that we're in between. And we bounced up against this, and we came back down twice. So we're going to really keep an eye on that. So what's happening this week, and what could we potentially have to make rates even better? Well, we don't have any good things happening this week. We have some unknowns. And here's the unknowns. We have a 3-year Treasury note auction on Tuesday. We've got a 10-year Treasury note auction on Wednesday and a 30-year Treasury auction on Thursday, as well as some continuing joblessness claims and initial jobless claims. So Thursday may be a good day for us if we can see higher than normal continuing jobs and initial jobless claims. That could be a good day, but really depending on how these bond auctions happen, we could see rates go either way because we are inside this level right here. I'm going to kind of zoom in a little bit more here. We're in this level where we could go either way. So we just turned a little bit green for the day, which means we're positive since we started, but we don't have a lot of move. We'd like to break through this. If you look at the 10-year, we're flat on here, but look, we busted below the 25-day moving average, and we're heading towards this Fibonacci level. So rates should, if they follow the technicals, they should get a little bit better this week because they should pressure against the 10-year should drop, which means rates drop, and then the 30-year should gain some ground. So we should see better rates through the week if we can get some really good news in these auctions. And the way auctions, the mentality of these auctions, guys, the way it works is this. If investors believe that rates are going to be lower in the future, and there's an auction right now selling a higher interest rate, they're probably going to buy more knowing that the future is going to offer lower yields and less interest rate or less interest. So these bond auctions may be pretty good right now. So keeping my fingers crossed that they go well. Kind of like, would you go to the bank today and get a CD at 5%, or knowing that they're going to be 3 or 4% in the future? You'd want to do it now. So that's why I think these auctions should go well. Should meaning the, fingers crossed. So overall, we're going to keep an eye on what interest rates are doing, but hopefully we'll see some good movement this week. So if you look at kind of where mortgage rates are, now keep in mind, this is an average across the nation. You can find this on Google. It's a very, very good illustration of how rates work. So if you go into 500,000 loan amount, you're doing 20% down and you have a 700 credit score, you're probably in the mid to higher sevens. If you have an 800 credit score, you're in the low sevens. If you put down more, 35% down, you're almost right at 7. You do 40% and up, you're about the same. But look what happens if you have a 640 credit score with, it's not calculating right. 640, let's do 10% down. You're at 8%. So I wanted to illustrate how rates work and how they can vary tremendously just based on credit score and down payment. So FHA is a little different. If you look into an FHA loans and apply, it's not, you have a little bit lower interest rates. If you have a lower credit score, you're going to want an FHA loan because the rates are much better if you have lower credit. So really, really great. If you want to know kind of what rates are doing, just Google mortgage rates and find this handy dandy little average rates calculator. It really is a great way of seeing kind of what's happening with rates. Now, another wonderful website you can go to is Mortgage News Daily. Mortgage News Daily is it's not affiliated with a mortgage company, but it really kind of goes over everything. It gives you the best case scenario as far as rates go, as far as what rates are doing. It gives you news in the markets, what's happening in the news. It gives you a lot of really great articles that you can share. So if you look, here's the charts, here's the averages, some really, really good information. It's got a lot of real estate related data as well. So if you want to go into housing data and look at new home sales and send out an article to your just click this share button and here you are. You can post this to Facebook, have a nice little thing nugget you can share with your community and send that out right away. So Mortgage News Daily, a really, really great website for you to go to in regards to what's happening with new home sales. Notice a huge drop here. It is coming back up, but a great, great resource for you guys to take advantage of and help your customers understand what's happening in the marketplace. lots of different information. Existing home sales is in here. It's dropped down a little bit. As rates go up, you can see how those slow down. Lots and lots of really good information. Obviously, the Cromford report, we love going and watching her. Go ahead and share their expertise on the Cromford report. But good news for rates, guys. So rates have come down finally. It was a rough patch for the last several weeks, and now we're seeing rates rebound a little bit. I don't have as big of a presentation for us. It was actually a very busy weekend. We had a lot going on this weekend. So last night we had a couple Cinco de Mayo parties that we hosted and sponsored, and now I'm just kind of getting back into it. So a little bit shorter of an update today. Does anyone have any questions on what's happening with interest rates and what's going on this week?
Sean?
Yes.
I heard somebody say that, and I think I've seen Tina debunk it, so I want your opinion, that due to an election happening, that the interest rates will go lower because the incumbent party wants to show low rates. Do you be
no.
true with that?
No, I don't. But here's what they want to show. They want to show a strong economy because they want to show that they're doing well, that everything's in control. So what happens when you have a strong economy? Well, typically you have higher rates or steady rates. A weak economy is actually what brings mortgage rates down. So one of the things that I've noticed over the last several months, and regardless of your political beliefs, this is just a fact, whether you're one side or the other, doesn't matter. Whoever's in party right now will try to keep the status quo and make the economy look like it's doing well in the middle of what we consider chaos. They're going to try their hardest. So what have we seen over the last several months? We've seen the jobs reports come in higher than expected. We've seen them be magically exactly the same number for 6 months in a row at 212,000 new jobs being created. It's not real. It's what every political party is going to do during an election cycle. We have to look at the reality. And this last jobs report was, you can't hide anymore. It was weaker than expected. And we all see it. We are the boots on the ground. We hear from our sellers. We hear from our buyers. We see the credit strapped buyers that are really struggling with making ends meet to try to buy a home because their budget's being squeezed by the higher inflation and by just the cost of living. So we see the reality, but when you see it on the news, these jobs reports, you can see during election cycles, and this happens every election, they're trying to keep the status quo with everything looking happy, roses and rainbows and unicorns, right? Now, sometimes you're in a position where rates are lower and they're going to try to keep that lower. But in reality, it's more of trying to keep the economy looking strong. And sometimes that means rates being higher, which is in the case of what's happening right now. Now, we saw a crack in the numbers on jobs. We saw that come in a lot less than expected on this last week. And what did that do for rates? They got better. So, but that's a weak economy. And do the political parties want to show that? Probably not. But that does move to lower interest rates. So I hope that debunked that for you and help that give you some facts to help understand how that works.
Yeah, she had shown it in a graph, Tina Tambor, and so, but then I keep hearing people like name that, but the way you explained it, I've got it now.
Yeah,
Thank you.
yeah. I mean, if you look at trends, sometimes they just happen to fall. I mean, you can make statistics look like anything, right? You can make it look like rates are lower during an election cycle if you see that, oh my gosh, 50% of the time they were. So just show those years and it looks like it was. But statistically, you can really show anything to anybody. But election years.
Here,
yeah. What's that?
Just to be clear, Tina Tambor's statistics agree with what you're saying here.
Yeah. Yeah. And I mean, you can literally show any type of statistic and make it look like the world is falling apart or the world is the best it's ever been. That's why the news sells things, because people feed off fear. And unfortunately, that's why the news is so awful. But yes, I think that we're going to probably see a wishy-washy world this next 6 months as we go into the election, date. You're going to see bad news and good news, and you're not going to understand how to make heads or tails of it. And that's just the reality. Now, I want to let you guys know I did do a special meeting this last week, and I did a presentation on understanding buy downs. If you did not make that webinar, that lunch and loan that we have, then definitely go back to my YouTube channel and check that out, because I went through extensively how to use rate buy downs in this market, how they work, how to ask the sellers for concessions to cover them properly, how to stack them, how to use a permanent and a temporary buy down together, and all of the different formulas you need. So if you have questions on that, definitely ask me. Head back to my YouTube channel, which is mortgageyoutube.com. So if you just type in mortgageyoutube.com, it'll take you right to my my YouTube channel with all of that wonderful information for you guys to peruse. Any other questions? That would be helpful to see side or DBAs. Okay, so that's sorry, I'm looking at some of these questions. I don't think I have any questions today. Well, rates did get better, so that's good news. Oh, I wanted to tell you guys, if a customer locks in an interest rate with most lenders, you do have the ability to do a float down if the rates get better. I want to make sure you know that. So let's just say rates are losing their shorts and we lock in because we're trying to protect our customers, and the rates get better. Well, they have to get better to a certain amount to make it make sense. But we can always renegotiate that and do a rate float down to get a better rate. So when some people say, should I lock or should I float? If it's super erratic and rates are getting worse and worse and worse, and they're just not showing a sign of rebounding, you need to be careful with your customer. You need to protect them, so that in that position, you want to lock and then reprice and float that down at a later time. So just want to let you know a little bit of how rates work. There should never be a cost or a fee to ever lock a loan. Nothing upfront ever. So I just want to make sure you guys know. And also, don't forget, I do soft credit pulls on every single pre-approval we do. So it doesn't hurt their credit. It doesn't even show up as an inquiry. It's a soft credit pull every time we do a pre-approval. It's not just onesie Tuesdays. It's every single time. Now, it is limited, so we can't run a DU through unless we have a full credit report, but we can see about 95% of the time if they qualify. If they are close, we will go ahead and run that full credit with their permission to make sure we get that fully approved loan through underwriting. But just want to make sure you guys knew that. Any questions? All right, guys, we'll have a phenomenal week. And next week, we're going to spend a little bit more time on down payment assistance programs, because there's a few really good ones that are out right now. So you'll hear more about that next week. And enjoy your week, guys. Keep your fingers crossed for good bond auctions and lower rates, and we will be in touch.
Thanks, Sean.
You got it, guys. Have a great day.
Sean,
Yes,
are you available for a quick question about assumables?
absolutely.
Okay. So I have a client, or I have a listing, and another client has reached out to me about possibly wanting to take advantage of their assumable because it's at less than 3%, and it's like 2/3 of the mortgage of what they're selling it for.
Got it. Okay.
So, my question is, I think I have a misunderstanding on assumables. They can assume the portion of the loan. I get that part. With the balance of it, though, do they get a second loan at the current rate, or do they have to pay the difference on that? How does that part work?
So whatever the balance is on that a loan that they're assuming, you're going to adopt that and the terms left on the loan. So if it was a 30-year loan, they're 4 years into it, there's 26 years. They're going to adopt the balance and the 26 years.
Okay.
Now, if the price of the home is significantly more than what that loan amount is, that gap needs to be filled somehow. They can bring it in cash, or they can get a second mortgage at current rates. So whatever home equity lines or second mortgages are going for right now, so 7s, 8s, 9s, something like that, for the remaining needed. Now, typically they'll need at least 10% down, because most second mortgage companies go up to 90. of the combined value of the price of the home. So they would have to secure a second mortgage if they don't have all of that cash.
Okay, so in this situation, the purchase price would be about 339. The assumable is around, I think, 215,000 at the lower rate, obviously. And then the person has around $50,000 for down payment and then extra for closing costs.
Okay.
So for that small amount that's left between the assumable amount minus the 50,000, that part they can get a loan.
Yes, they
Can
can
they
get a
get a
second
loan from
mortgage.
you, or do they have to go to a assumable loan servicer to get that balance part?
I would talk to the lender that's doing it first, because you
Okay.
have to go through that lender
Okay.
and see if they have a second mortgage that they can give you as well. If
Okay.
they don't, then we do have options for them. But I would start with that servicer first, because you have to go through the whole rigmarole with
Okay.
them for that transaction. And
Okay.
if they're already clunky, throwing another lender to the mix may make it even clunkier for them. So if
Okay.
they have that, great. If not, then they can go anywhere for that second mortgage.
Okay, that's the part I wasn't sure about. Okay, that's super helpful. I appreciate that. And I was trying to throw some business, but it makes
You
more
got it.
sense
Hey,
to
I
just
would
keep
love
it all
to.
together.
Yeah, for sure.
So, thank you so
And
much.
are they still taking a few months to do those assumables out, Sean?
Yeah, they can take from 30 days to 120 days. It
Oh, that's good.
obviously just depends on the servicer. And think about it this way. If you're a mortgage professional and you have your own book of business, you're not going to want to waste your time handling a lot of these assumable loans, which you don't make any money on. So it's kind of like an afterthought for them. They don't really like doing them. It's just they have a processing, and usually it's a loan officer that's handling them. That's not very good because they couldn't make it on their own. So they kind of get pushed into this. So you're going to get some clunky, really, it's not the best experience, but you can get your buyers a phenomenal interest rate by doing that. So just have some patience. If you need somebody to help you processing, Mike and Rochelle are some friends of mine that have a processing company called takemylowrate.com.
Yes.
They literally help do the whole thing, and you can contact them direct.
And they'll work with the original servicer.
Yeah, they'll call the servicer every day, hound them to make sure it's all dialed in.
Oh, interesting. Okay. Okay, perfect. All right. Thank you. Have a great
It'll,
week.
yeah, you too.
Thanks. Bye.
Sean, I have a quick
Yes.
question. I'm
Sure.
working with my first buyer, which is exciting, but her son has a friend who is part of a mortgage company of some kind. I don't, it looks pretty shady to me, but she's determined to use him. But I left him a message. He's not calling me back. Is it okay if I offer to bring her in to talk to you, even if she decides to go with this other person? I mean, is that something we can do?
Absolutely. So, absolutely. I'm happy to do that. So usually the way we handle that is say, listen, I know your friend, your best friend's uncle's cousin, your
Yeah.
third sister's brother's nephew's best friend is a lender, but can you talk to this guy? He's top 1% in the country for the last 9 years. He knows what he's doing. He's been doing it for 25 years just to get an opinion.
Yeah.
You can use whoever you want, but we want to make sure that they're putting you in the right place. They understand what they're doing, because mortgage law takes a lot of experience. And if they're newer, it's just best to get a second opinion. And yeah, feel free to use them, but at least talk to my guy to make sure he's, you're getting the proper advice and there's not anything that's being missed, whatever. But yeah, I'm happy to do that.
Have you heard of Sago Home Loans? That's his company.
Say go.
Yeah.
Sounds like a broker, which means he probably works from his house, which means he doesn't have much control over timelines or anything. Let me look that up real fast. A new kind of lending experience. Say go.
Right? I was like, okay. And there's
Uh,
no pictures of any of the team. It's very impersonal. His voicemail doesn't even have a personal message on it. I'm like, who is this guy? And he's young.
so
Her son is 25, so he's probably between 25 and 30.
there's no names on it as well. Partner with Sago. Let's look up their licensing. Sago State. Let me do this. Hold on. I can look up the companies to see how many loans they close.
He's telling her, "Oh, I'll give you a deal. I'll do it for free," because he's best friends with her son and all this. So she's just,
You can't do a loan for free. You have to make your comp. There's some rules on that. You can make it sound like there's a lot of smoke and mirrors. All right, so lender companies, say go. Whoops. Do you have a name of the loan officer?
yeah, his name is, hold on, John.
John?
John. She texted it to me. Presto, John Presto.
Presto.
Mm-hmm.
He used to be at Atlantic Mortgage. Looks like he's only been in the business since November of last year.
Okay.
He's closed 21 transactions in the last 18 months.
What does that tell you? That sounds like a lot to me.
Compare and contrast that to me. $109.
Okay.
Doesn't say he's a bad guy, doesn't say anything, he's just newer. If your buyer is super squeaky clean and doesn't have any issues and is just doing a vanilla loan, it could go fine.
She's divorced and she has a cash. She's got about 500K in cash, and then I don't know, about $1 million invested from her divorce, but that's all she has. She's from Indiana, which is a no alimony state. That is all she has, and she never had a career. So she's really scared and she really wants to come down here because her son lives down here, but it's so expensive for her compared to up there. So she's just like, I don't know what to do. I don't want to sink all my money into a house. So that's her situation, but she's got really good credit. She's got good credit and she does have this cash, but she doesn't have a job.
So as far as the loan goes, how much did they pre-qualify her for?
I don't think he even has yet. I think she's only talked to him on the phone.
Because if you don't have a job, there's all of the Fannie Mae type loans are kind of out. Is she retirement age?
Yeah, she's 61.
Okay. So you could set up an IRA or an annuity to give you a defined distribution from those assets.
I think that's what he's telling her he would do.
Okay.
Take her 500K down and then do a loan because I've been showing her a million freaking homes all over the valley, and
Yeah.
she's a North Scottsdale lady. She just doesn't like anything but the nice, and so I guess if she wants to spend 850, 750, 850, she can.
Yeah.
If she takes a loan out for the rest. But does that work? Because
Yeah,
he's telling her no problem. He's telling her, oh, no problem. This will be no problem. But
well, it's really easy to do. The rule is you have to set up the defined distribution. You have to actually make one distribution from that into your account. and then the amount of money left in that account has to last at least 3 years based on that distribution before it runs out. If all of that fits, it's actually really easy to qualify.
Okay. All right. Well, that's good to know. Thank you. Yeah, I'm
Yeah.
going to try to get her to come in and talk to you, at least talk to you. So,
Sure.
okay. Thank you.
Cool.
Awesome.
You got it. Have a great day.
Bye.
All right. Bye-bye.